dignitaries, distinguished guests, ladies and gentlemen, all protocols observed, good afternoon, welcome back. I hope you have all enjoyed the lunch and looking forward to a very interesting and interactive session. So our next session will begin shortly. It will be divided into two parts. We will begin with a panel discussion on the topic Bridging the Financing Gap in Africa, followed by a 15 minutes question and answer session. I would also request you to physically check your mobile phones and smartwatches to ensure that it is on silent mode. Thank you very much for your cooperation. And to get the panel discussion underway, we'll first welcome our panelists. The first one is the Chief Executive of the Financial Services Commission of Mauritius, Mr. Daneshwarnath Thakur. Mr. Thakur has over 25 years of central banking experience. He has been at the forefront in the establishment of a modern regulatory framework of a spectrum of innovative financial products and services such as peer-to-peer lending, crowdfunding, special purpose fund, robotic and artificial intelligence enhanced advisory services, and guidelines for the issue of green bonds, amongst others. So let's welcome him with a big round of applause, please. Welcome, Mr. Thakur. Thank you very much for being here. The second panelist is Mr. Malcolm Moeller, the Group Managing Partner of Appleby. Mr. Moeller specializes in advising financial institutions on financial regulation, regulatory capital issues, financial institution M&A, and insurance-related transactions. He advises on private equity funds, hedge funds, derivatives transactions, and securities offerings, as well as a range of corporate and corporate finance transactions. Mr. Moeller is a member of the Law Society of England and Wales, the Bermuda Bar Association, and the Law Society of Australia. Let's welcome him also with a big round of applause, please. Thank you very much. Welcome. The next panelist is Mr. Maharshi Sharma, the Managing Director of UCAP Asset Management, Singapore. Mr. Sharma has over 24 years of work experience in the banking sector as a senior private banker, team head with banks like Standard Chartered, Citibank, Credit Suisse, BNP, and Deutsche Bank. He brings immense experience, having worked in Dubai, Switzerland, and Singapore. Very warm welcome. Please join us on stage. Our next panelist is Mr. Samuel Chasia. He's the Director of Business Development of Capital Markets at Guaranco, Kenya. He has joined us virtually. Can we confirm this? He has joined us virtually. Yes. Mr. Chasia has over 22 years of investment banking and investment management experience, and is an expert in debt capital markets, project finance, asset-backed securitization, credit investing, structuring, and fundamental investment analysis. He has extensive experience in both the US and in Africa, having worked for leading local and international firms. And we can confirm he has joined us online. Very warm welcome to you, Mr. Chasya. The final participant, Mr. Babajide Bola, the Senior Vice President, ALM and Treasury Risk Analytics for Africa Finance Corporation, who has also joined us virtually. Mr. Bola is primarily leading the asset and liability management and treasury risk analytics function within the Treasury Department. He has over 20 years of experience in proprietary investing across various interest rate products, ALM practices, hedging market risk, treasury sales, funding liability generation, operations and settlement, and relationship management. Can we also have a big round of applause for him, please? Very warm welcome. And our moderator for the session is Ms. Krishna Gangopadhyay, MD and CEO of Afrinex Exchange. A warm welcome to her also, please. So I remind you that this will be a panel discussion followed by a question and answer session. So if you have any questions, please keep it for the end. Ms. Krishna, the floor is yours, please.
Thank you. Good afternoon, everyone. The session that we are here for, which is bridging the financial gap in Africa, is of course a very, very ambitious topic, and easy to make it a motherhood topic. And so what we will try to do is focus on very specific areas in our discussion, leveraging on the expertise of our panel members. Esteemed panel members have very specialized experience, and we really want to learn from them on how we can do some of our initiatives in terms of helping bridge the financial gap to whatever extent our platforms like Afixtree or Afrinex Exchange can contribute. So with that motto, we have this agenda. So thank you everyone for joining in today's panel discussion. Mr. Thakur, Mr. Muller, Mr. Sharma, Mr. Chasya, Mr. Bole. Thank you. So my first question, and there are many areas, the way we will structure this panel discussion is we'll have about 45 minutes of questions to the panelists. And then we'll have 45 minutes of questions to the panelists, and post that we'll keep about 15 minutes for question and answer session. So broadly, for Africa, if we look into the challenges of financing gap, there are 4 key areas. One is...
I'll give you this mic, please.
This is better? Perfect. So there are 4 key areas or themes in which we will have today's discussion. The first one is mobilizing private sector financing into Africa. We, of course, have a lot of sovereign investment, multilateral institutions investing, but mobilizing private sector financing is not that easy. The second theme of the day would be on domestic currency depreciation. Of course, we tend to paint Africa in one brush, thinking that all African countries are having currency depreciation. That's not true. But at the same time, that is often a major trend in terms of instability of the currency, or rather fluctuation with respect to US dollar. So that also impacts in terms of the returns or the yields for the investor, as well as the obligations for the issuer or the lender, or the capital raiser. The third theme on which we will discuss is what could be the role of capital market institutions and stock markets in particular in addressing and bridging this capital gap. And the fourth point would be corporate governance transparency challenge, which is actually a strong perception amongst international investors. So, what could be done on this front so that there is more transparency, or we can take initiatives whereby international capital, international investors can come more to Africa? So, with these four theme areas, I start with the first one, which is mobilizing private sector financing in Africa. And I start with you, Malcolm. So, Appleby has been a leading legal advisor for international companies as well as funds in Mauritius, and of course in Africa as well. Globally, it's a renowned firm as well. What, in your opinion, are the key considerations that private sector investors consider when they choose to invest in any project in Africa? And how do you think a platform such as Afix3, or for that matter, any such capital raising platform, can add value in those considerations that investor has?
All right. Okay. Thank you, Krishna, for raising this interesting topic. I think one of the key issues that there are several key issues when you're dealing with investment into Africa. Obviously, one of the main key issues is obviously a political and legal stability in a relevant jurisdiction. It is one of the main things that we hear from investors all the time about the legal stability and the economic environment in a respective jurisdiction. They often look at the economic growth as well in the region as well. They look at the country and they look at what is the growth in that particular region, or what's the growth in that country. It is one of the key things that they often look at. And the other thing as well is that they also look at the market size as well. They look at the size of the market and look at the opportunities in that market as well. When the investors are doing their due diligence, this is the key things that they look at. The other thing is the regulatory environment as well. They look at the regulatory environment that is it conducive to international investment coming into the country? Is it streamlined? Is it what is it? What do you need to do to be able to invest? Do you need to go to the government and get various permits before you participate in the market as well? It's one of the things that when they're doing their due diligence, they often ask us the questions. And then the other one is, if I may say, probably the last one is more a risk assessment as well for the investors as well. They look at the risk that they perceive that particular jurisdiction. They look at the political, operational, market, currency risk, as you mentioned, and some other challenges as well in terms of return and repatriation of capital as well when they realize the investment. Now, the other question you just raised about what the platform has to offer, I think the platform is a great opportunity, which it depends how you looked at it. It's a platform they actually provide a lot of this risk assessment already. It's already been built into the platform for the investors when they come in, when they come for investment, and when they use the platform. The data that is available on the platform is something that's really going to help the investors make a decision as to how they invest and what sort of level of comfort that they're going to be taking in terms of the investment strategy and what they want to do.
Thanks, Malcolm. Mr. Thakur, sustainable financing is critical for sustainable development and has been at the core of Mauritius' growth philosophy. So, how FSC Mauritius is attracting private sector players to contribute to sustainable development agenda through its policies and regulations.
Thank you, Krishna. For the Financial Services Commission, sustainable funding and sustainable development is very, very high on our agenda. Anybody who had the opportunity to have a look at our strategic plan will see that we have placed ESG principles as the core of our strategy moving forward. And that doesn't come in isolation. It comes basically through a very well architectured strategy, and which starts at very much high level. So with respect to the country level international commitments that were taken in the several COP meetings, etc. And then that percolated at the level of the ministry and the government on the actions that they take. And then we as the regulators, we therefore translate all these visions into the actions. And if I may cite, we have already embarked in this journey back since 2015, where Mauritius committed to the United Nations Sustainable Development Goals agenda as part of our sustainable development. And after the COP21 in Paris was completed, we also ratified the engagements. And not later than 2019, we also adopted what is called the Marrakesh Pledge, or the COP22. And from there on, we have been moving towards how do we translate those. And very recently, if we go back just 2 years back, we see that the 2020-2021 budget, the government already announced the development of the green finance framework for the country, which included the regulatory and supervisory framework for the issuance of sustainable bonds and green bonds. And following that, in June 2021, the Bank of Mauritius, which has also set up a climate center, has also published the guidelines for the issue of sustainable bonds in Mauritius. And FSC is a member to that center. And we therefore translated our part in December 2021 by issuing our guidelines on corporate and green bonds. For those who would not know, our specialty in Mauritius is that whatever goes under the non-bank come under the aegis of the Financial Services Commission. So that's why the green bonds were issued, the guidelines of green bonds were issued by the Financial Services Commission. And just for to recall that in the last budget 2022-2023, following the commitment of the COP26 summit, Mauritius also committed to reduce the greenhouse gas emissions by 40% on the horizon 2030. So all these therefore lead to how therefore do we translate. As I said, we already have some of the agenda. Internally, therefore, we have been working on the guidelines for the corporate and green bonds in Mauritius. And in terms of the 4 different actions that we've taken, we have aligned our taxonomy for the sustainable contribution to the environment. We have therefore been describing what we call the green projects. We have also requested that the annual green bond progress report be provided, and also we have also accredited external verifiers who will issue the pre-issuance and review confirm of the alignment. But then moving forward, what we have also done is with respect to internally, while the ministry has set up an objective to come up very soon with a national framework on ESG, we know that that framework will translate into the regulators what type of requirements they will put for the investors in it. And we have concentrated on the the pillar which drives the financial services most is the investment funds. And for that, we have already come up with our, I would say, the draft guidelines for the sustainable bonds, which will shortly be circulated for public consultation. And then it will contribute as the national framework on which the Ministry of Financial Services will very soon come up with with its own framework. So all these actions lead towards a very committed and a very planned way for us to increasingly attract investors in this area, and who will therefore not only invest but also use our own jurisdiction, our framework, and our accreditations to invest, especially in Africa, where, as we heard the Prime Minister say this morning, they already need for 300 billion of funds.
Thank you, Mr. Thakur. I go to the panelists who have joined us virtually. Mr. Babaji Debola, can you hear me?
Yes, Krishna.
Thank you. So my next question is to you on the same topic of mobilizing private sector financing into Africa. Multilateral development financial institutions like AFC are deploying their risk capital to catalyze private financing for inclusive growth as well as sustainable development in Africa. What have been your experience about mobilizing private sector financing into Africa?
Yes, thank you, Krishna. Our experience at the AFC has been very good in mobilizing private sector capital. As you rightly said, private sector investors are worried about foreign exchange risk, early stage and project risk, as well as other risk elements as well. So at the AFC, the way we get investors comfortable in our projects, which we need, is to de-risk these projects by leveraging on our investment grade credit rating. We are currently rated A3 by Moody's. That allows us to tap the international financial markets at competitive rates to enable us to support the early stage projects, thereby de-risking them for other private sector investors to be able to commit capital to these projects. As an example, last year, AFC acted as the writer and as well as global coordinator and MLA on a €1 billion facility for a national financial institution. Without this guarantee, a lot of the private sector capital players who invested in projects wouldn't have done so. So that's an example of how positive our experience has been as we continue to support the continent with our various capital market products.
Thanks, Babajide. May I ask for an investor's view as well from you, Maharshi? So you have a rich experience in banking and financial services sector, working in Singapore, which itself is a prominent IFC in itself. So Mauritius is also in its journey of becoming a very strong IFC as well. So what do you think can be done differently, whereby international private sector players are excited to invest into Africa through Mauritius like they do in Asia through, or even globally through Singapore?
Thanks, Krishna. So basically, from an investor's perspective, and after working for so many years in different regions, to raise a capital, investors needs very simple things. He needs his protection, which is investors protection program, which a lot of countries run. He needs a solid regulatory framework from a regulatory perspective, which is banks, central banks, and the bodies which are governing. Technology, because we are going towards that way. So advanced technology is something which an investor is looking the easiness to enter into a country and the easiness to exit into from a country. So if we bring all these factors, raising capital is not a challenge. Uh, but I have seen over the past so many years itself that when an investor comes, and sometimes he get locks himself. So by providing him a global and a robust protection program, so that he can, if he's getting into something and he cannot fight his own battle, it become difficult for him. So by providing him with a robust solutions, legal framework, which can also help him. Uh, Apart from that, of course, Singapore is very different because the regulatory framework bodies are very very different. We are governed by MAS, which is the Monetary Authority of Singapore. So creating something similar of a extreme regime, because we are in a regulatory framework right now where it will become more and more stringent. And more the stringent framework, the more the investors likes. Why? Because he thinks that he's coming into a continent where he is protected. So yes, to keep it simple, the investor is looking for his protection because he's bringing his wealth, large family offices, large global ultra families which are coming into. So we should give them the platform so that they can kind of understand and come into a simple solution.
Just on the a short comment on that is sometimes I feel Mauritius is more stringent than Singapore.
No, I know it is. It is. There's always pros and cons to everything. Singapore has its own pros and cons. Mauritius is also stringent, but from a regulatory perspective is one thing. From an investor's protection program is something different. So when you bring in an investor, you have to protect him. From a government perspective, I'm talking.
Right, right. Okay, so that makes us move to the next topic or the next theme of our discussion today, which is domestic currency depreciation. As I said, we can't paint entire Africa in a single brush, but this is something that does impact investor sentiment, especially if you're looking to attract global investors who often prefer to invest in US dollars. So I'll start on that with you, Mr. Thakur. You have been a central banker and now you are into the capital market regulatory role. So, what do you think can be some of the steps to address global investor sentiment to invest in local currency? Because that's what gives ease to the fundraiser when it comes to local currency obligation.
Um, First, I would like to add that let us look at the global scene. The recent currency depreciations were perhaps some out of normal experience, with the exception to the normal rule, and it has hit most currencies. And if you look at the currency pairs, you see that the behaviors have been a bit basically what happens in the period of stress. While we see that even currencies like the GBP have been under tremendous pressure for other reasons. I do believe that the investors look basically at other factors and not only into what the currency and the way the currency moves. And while for Mauritius also it has not been an exception, but we see that all the currency is a result of the fundamentals, the demands. But safe to say that what investors also look is the stability. So over the period of time, where do we stand? And now, when it comes to the sentiments in the domestic currency, we can find that we have laid down the necessary fundamentals and the necessary regulatory framework, as well as the operators, the reputation of the operators, the type of people invest. All these are actually factors to consider, which therefore will make these investments meaningful, and there would be, of course, a positive return. we will not be able to only take the Mauritian rupee in isolation, nor will we be able to take only the currency strength compared to the others. We are here on a recovery phase, and as also announced by the Minister of Finance, we see that now all the indicators are green in terms of where we are reaching. Even in the financial services sector, in the tourist sector, we are very now close to, or perhaps already surpassed the pre-COVID levels, and therefore the investment, whether here it is domestically, are being backed and supported by the other fundamentals and safeguards that have been put forward by the government in terms of the vision and by the regulators in terms of strategically what we intend to do.
Thank you, Mr. Thakur. I have a question here for Samuel Chasia. Samuel, Guaranco has taken various financing initiatives in many African regions to improve infrastructure development and quality of life. If you could throw some light on how fluctuation in domestic currency impact mobilizing private sector investors and the lessons experience that Guaranco has from this.
No, thanks for that. No, I think Aramco's mission is to, as part of what they call the Private Infrastructure Development Group, is to mobilize private sector investment into infrastructure and preferably local currency. So the reason why that is an important part of our mandate is because infrastructure by its nature is generally consumed in local currency, whether it's a road project or a water project or whatever type of infrastructure, usually, whichever way it's financed, it is usually consumed in local currency. So it is important to make sure that we match the funding of those projects with how the revenues that are going to be received to pay back those financing are matched. Now, given that we have, especially in the African context, we have this funding gap. There's obviously been a lot of financing that comes from outside of the continent, usually in either in hard currencies, so usually euros or in US dollars. And what essentially happens in that situation is that cost or the currency depreciation or mismatches in those currencies of kind of revenues and the financing is usually passed on to the consumers of that infrastructure. Now, what we've seen in our experience, and Guaranco has been at least doing guarantees here for about 17 years, is that initially when we were having discussions potentially with private sponsors of projects who are obviously looking to maximize their profits while deploying these projects, there used to be a hesitancy in terms of being able to consider local currency solutions as part of the financing. The common refrain that we usually had is that, local currency, is expensive, and I put that in quotes, because the true nature of the true cost of that financing is usually hidden or not in plain view. Now, what has happened over the last 5 to 6 years, as kind of we've seen more volatilities in currencies, especially in the many countries that we participate in, that risk is now acute. And so we are seeing a lot of project sponsors or financiers of projects really putting a very, very keen eye on looking at kind of local currency solutions as part of the financing piece of projects. We, as I said, our mandate is to actually support projects in whichever form they come in. Prefer that those projects are financed in local currency, and our guarantees are actually local currency guarantees. But the point is that we have seen this kind of evolution as currency risk has actually reared its head. after I think a long lull of pretty benign kind of macroeconomics and fiscal type of environments. That kind of risk is now front and center, and we're seeing a lot of projects and sponsors coming to us to kind of see how we can deploy and use our products to allow them to mitigate that risk. Now, it is very important, and currency mismatches are a big concern right now. I think before, like I said, that risk was not fully considered. And these mismatches actually are a big concern, especially for foreign investors who are looking to deploy capital in our capital markets. And in many projects that we are supporting, it's something that is top of mind. And what we've been able to do is, in some instances, we like I said, we try and get as much local currency into the financing mix as we can. We've also, for example, been able to offer kind of synthetic type of products where we are able to actually provide, let's say, a hard currency offer or financing that is actually pegged to the local currency exchange rate, so that the actual project with the borrower does not actually, experience the currency mismatches. We have some investors, for example, who are willing to take on local currency risks, but they want to be sure that when the investments, if they come in hard currency, they are settled in different payment dates in hard currency that they invested in. So we've seen a lot of these solutions. We're very innovative in terms of what we can do, and our kind of mandate and what we say here is to make sure that we deploy as much private sector local currency financing in these projects to make them sustainable and ultimately profitable here.
Thanks, Samuel. Maharshi, my questions here is from an investor's point of view. What innovative financial mechanism or instruments can be used, or you have seen being used? Let's say there was a point when even in Southeast Asia there was a huge currency risk and fluctuation happening just 10 years back. So what sort of instruments were used, what financial mechanisms were used, and what can we learn from them for the African economies? Is there something that we could look at from there?
In today's scenario, currency is a very important subject to understand. So providing the investor the opportunity and the capability through the banks that they can use hedging opportunities. Hedging is a very, very important tool in today's world, because when a business deals in two currencies, they don't want to take a currency risk. So you do a hedging by using forwards contracts. Another way of protecting the investor is using swaps. So you provide through your banking platforms the client the opportunity to use the swap. Swap is basically nothing but the investor, two parties coming and locking interest at a future date. So you protect from that perspective. Third is by creating a currency stabilizing fund, something through the central bank. That's also a very important thing, which a lot of countries do. So what they do is basically in a highly volatile situation, which we have seen and everybody has seen in 2008 and all those eras, by creating you protect your own country's currency. Another way is giving your banks and the opportunities to create instruments which can help them to protect their own currencies, and promoting your local currency also. So the more and more you promote your local currency, the currency risk starts going away.
Thanks, Maharshi. So, Babajide, you again, AFC is very, very prominent in this area for raising funds and investing in local currency. So what are some of the steps you would suggest to control this forex risk, and especially how do we attract international investors who are very wary of taking this currency risk when investing in African economies?
Yes, thank you, Krishna. Like the last speaker mentioned, hedging is very, very important in today's world. There are various structures out there which investors can use to protect themselves and borrowers alike, such as FX forwards, FX swaps, as well as FX options, just to give you some level of certainty in an uncertain world. So these sort of structures will help you to protect your investments while you wait for the exit to repatriate your funds. The other steps we have taken to give some level of support in the African continent is that we have a swap program, which is denominated in US dollars, which we use to support African central banks. Now, African central banks use these swaps to stimulate their respective domestic financial markets as they defend their respective local corporates. This swap program has been in existence for the past 5 years and we've actually supported a number of African central banks in this regard to also further attract private sector international investors to invest in local currencies. We also have, we've also deployed African Resilient Economic Facility, which is the size of $2 billion US. We launched it last year, which is also targeted at African central banks as well as African financial institutions, which helps them to bridge the gap in foreign currency terms to support their own various clients as they can, to enable them to fund their various projects in their various countries, pending when they can now repatriate or cover the FX liquidity from their various central banks. So these are the various ways where AFC has actually supported the African continent to further attract international private capital into domestic African markets.
That sounds quite interesting. And actually, that brings to the next point for you as well, which is the role of capital markets, stock institutions. So one is, of course, in terms of this hedging, but then what do you think, where could capital markets, which is quite illiquid, even on the primary side across Africa, could collaborate with multilateral financial institutions to increase the liquidity? Again, I'm saying liquidity on the primary market side. And here I'm referring to both debt, equity, or even for that matter, bond securitization.
Yes, so there are a host of ways where MFIs can collaborate with institutions like MAPNEX to increase investor confidence in African markets. The first that comes to mind is educational programs, where you can educate various investor categories as to the benefits of the investing in African markets through the exchanges. We provide liquidity and transparency for the securities listed, as well as issuers of those securities. Another way where we can collaborate is by writing those securities as well, which also increases the liquidity of the securities for the benefit of the investors, to give them increased confidence in the asset classes. Because by adding your guarantee on the security, you actually enhance the creditworthiness of that. So ultimately, that will attract more capital through the exchanges. And lastly, you can also collaborate via advocacy by adding the regulatory firms into the picture, by increasing the level of reporting required, the level of disclosures required, and also discussing with more legal firms on how to enhance the level of documentation required to issuers. All these are examples of ways MFIs can collaborate with institutions like AppNext to boost investor confidence and increase overall transparency of securities listed exchanges.
Thanks, Babajide. Samuel, GuarantCo also provides financial solutions for development of local capital markets in low-income countries. So, what has been your experience when you think of market infrastructure institutions in improving the financial inclusion, especially when you stand as a guarantor or offer guarantee services in different low-income countries in Africa?
Yeah, no. So alongside our mandate to catalyze investments in infrastructure, we also have a separate mandate to actually develop the capital markets in the countries that we participate in. And the reason why that is important is usually the capital markets are the respite of the longest tenured kind of capital that's available in all of these countries. And in our experience, a lot of capital, a lot of infra projects require long-term financing. So that is a natural area for us to kind of work to develop. And we've been quite successful in doing that. The challenges obviously are, as you mentioned, are very real, and a lot of the capital markets in Africa in particular still need to get developed. And so what we try and do is in various ways. So we have a multi-pronged approach to develop those capital markets. On the one hand, we actually support actual issuances, work with the capital markets players to help de-risk the projects that come in. Specifically because projects in infrastructure usually are not, in many countries, actually an asset class that is recognized to be other investable kind of asset class. So encouraging capital markets players to deploy capital in those asset classes in infrastructure, project bonds, asset-backed securitizations, those are kind of areas that we're trying to push them, and our products kind of help mitigate that risk so that they can actually get comfortable and over time, hopefully, develop the appetite and the capabilities to invest in these without our support. Secondly, we also are very, very keen in capacity building, and that capacity building is on both sides, building capacity on the actual stakeholders, so the players themselves, the potential issuers of bonds, making sure that they're aware that there's a way to actually get finances in their projects, and for investors, it's actually an asset class here that is available to be invested in. So we spend quite a bit of time actually building that capacity to make sure that, apart from just guaranteeing the actual issuances, we actually help build the pipelines that will actually help bring more issuance in the future. And then finally, also on the capital markets, in the capacity building side, we work very closely also with regulators to make sure that we have kind of enabling environment that allow these particular projects and these particular type of products to then come to market. So like I said, we're very kind of involved in trying to make sure that this particular conduit, in terms of project financing and capital markets financing for these projects is viable in many countries where, for example, we don't have any issuance, or the issuance is dominated by government issuance. So getting the stakeholders to kind of look at these other asset classes is something that we're very keen to develop, and we've had some successes doing that, and we continue doing that. For example, in Kenya, we issued a couple of green bonds and supported them. We worked with InfraCredit in Nigeria in terms of getting them to be able to bring capital markets issuances in local currency. And again, these are kind of the solutions that, again, we are trying to really make sure that we have a comprehensive way of looking at what is needed to get the capital markets involved in providing financing in the infrastructure space.
Thanks, Samuel. Just want to focus on the same topic for Mauritius as well, when it comes to the capital markets in Mauritius and what we could do differently here. So, Malcolm, what do you think in the primary market space in Mauritius? specifically. And of course, Mauritius is a destination for further investment into Africa, so we need to keep that in mind as well. What do you think can be done differently to address or to beef up the ecosystem between the stock exchanges and the different financial institutions or ecosystem, be it bank, be it multilateral institutions from Mauritius?
I think obviously the capital market in Africa in general, as you probably know, I think small and medium-sized companies always seems to have difficulties having access to the capital market. I think that's one of the key areas that obviously, the regulators, including us as well, stakeholders in this area, that we all need to address. Because I think it's critical that we allow or we facilitate access, for capital by small and medium-sized enterprises. That's one. And the other thing as well is that, enhance the regulatory environment as well. We need to look at ways of streamline the regulatory environment as well. I mean, Mauritius capital market is quite obviously, it's small, but it's got all the regulatory framework to allow listing, for example, on the Mauritius Stock Exchange. But I think we're going to need to do a lot more as well in terms of educating investors, especially international investors as well, that there is a robust capital market framework. And I know that ISDA, for example, the International Swaps and Derivatives Association, they've set up a committee to have a look at how they're going to encourage capital markets in Africa. And I know that's something that the central banks, I believe they are in discussion with the central banks as well to try and improve that as well. In terms of developing the local, capital market, locally, I think there's a lot that we need to do. As I said, investor education is one. And obviously, we also need a form of a partnership or collaboration between the government, the private sector, and all the parties involved in terms of, the financial market, to kind of enhance the access to capital market. I think there's a lot, from international market. I mean, we've seen quite a lot from an international market perspective, and we see what the international investors have been asking for. I think the framework is already there in Mauritius. You look at the capital market in Mauritius, although they're small, but the framework is there to allow listing. You look at Affinex, for example, there's quite a lot of opportunities, available. So maybe we need to educate investors a little bit more in terms of the investments into African capital market, including Mauritius.
Thanks, Malcolm. Mr. Thakur, do you perceive there is any gaps that is there in, especially in terms of, again, the ecosystem, where capital markets engage with other players in the industry? Do you perceive any gaps specifically for Mauritius? And what do you think could be done to bridge those gaps? Again, specifically, I'm talking about capital markets with the banking sector in Mauritius as well as internationally.
In all the markets, there do exist, I would say, room for improvement. And if your focus is with respect to the framework in Mauritius towards what could be done for Africa or the way we interact with them, if you just look back over the times when even Afrinex was set up, we've gone a long way to identify and bridge those gaps with specific focus on how do we allow investors and players in the market to use cross-border listing and to make it as seamless as possible. There were a number of barriers and hurdles which we have basically gone a long way to make them happen. I do recall we had at some point only IOSCO registered members to be able to do cross-listing and exchange of information, but also we have changed that.
Wow.
And now what we are also doing is, in light of that work carried out, we are coming up with a complete overhaul of our Securities Act, which we believe will put us on a next level. And it will very soon, within a couple of months, go on public consultation. We have already one consultant working with us. And we have at this stage focused on what are the best standards and best practices, with alignment with the IOSCO principle being very high on our agenda, and how do we address it. And now when it comes to the bank itself, there is always a disconnect. We always believe that those in the capital markets will move much faster, and banks do, when it comes, sometimes the back office are a bit hesitant at the beginning, but eventually I'm sure they will catch up. And therefore, what we are doing is let us call it a 2 or 3 pronged approach. One would be, as I said, changing the fundamentals. Second one, going out to
No, I think this one is still working. That's the problem, probably with yours.
and at the same time making awareness of what we are and how are we approaching it. And at the same level, what we are also trying to do is the corridors of cross-border that we have and the agreements that we have signed. These are also areas where a number of non-technical things could be addressed, given that we are the signatories of a number of preferential trade areas, and therefore these will make things align. I do hope in future, in very near future, where we can have cross-border listing. Why couldn't we have cross-border banking services being carried out? That will definitely help iron out lots of problems, especially where the actual back office or the fund flows of the actual stock exchange that have been carried out are also carried out in a concurrent manner. So there are not many gaps, but I think these will be addressed very soon.
Okay, so yeah, I'll try to, I know I have overshot time, so I'll close with a quick question. I'll probably have a same question for both you, Malcolm, and Samuel, and that's on corporate governance. I think both these organizations, both Karenco as well as the legal councils, always have this perspective, and they are the flag holders or the pole bearers of transparency, corporate governance when it comes to investors having confidence in any prospective investment. So, Malcolm, to start with you and ask you is, how could legal counsels help address the concern of lack of transparency in African companies? They always say, there are 3 sets of balance sheet, one that is visible for all, another for shareholders, another for board. So there are all these, whether they're rumor or concepts that go around. What do you think legal counsels can do to help alleviate some of these concerns, and how well-founded are those concerns?
Yeah, well, yeah, I know that's it is an interesting topic as to how you actually give an international investors a comfort that where they're going to put their money is is safe. But I see our role, obviously, in the ecosystem is to guide, our clients who are the investors and obviously the banks as well, to come into an environment it's, conducive, it's transparent. And I think through that transparency, we're giving them a confidence that they're coming into the system that are very transparent. Obviously, we need to educate them as well. There's a bit of education as well on the international investor side. They will come with preconceived ideas about the jurisdiction or the continent as well. So our role is to educate them based on the data. The platform the Affinex has set up, for example, is going to be a great tool to be able to have aggregated data on a platform where you could tap into and give someone someone could make an informed decision based on that data, that we know the future is going to be based on data. So that's one thing on our side, educating. The other one is in terms of conducting due diligence as well, is that I think we need to kind of take a different approach when we're conducting due diligence as well. So we need to educate them as well about the due diligence of in African assets, what you need as well in that as well. And implementing a robust, governance framework is what we can help international, investors as well. And by us working with them, we can definitely give them the comfort that, the system that has been implemented, the system that the FSC had implemented in Mauritius is as good as the system that have been implemented in London. So we can give them that comfort as well as they come here as well. Obviously, there is a lot to do in giving them, that comfort. And obviously providing them on ongoing legal support, showing them the ability that we've got the expertise to be able to guide them through it. ISDA, for example, when they come to Mauritius on the capital market, we give them the confidence and the comfort that we could do precisely what they are doing in London. You could do it here as well in Mauritius. So I think there's a lot we could all do in terms of educating the investors and actually give them the comfort through our role as the bankers, the lawyers, accountants, and anyone within the ecosystem to educate the international investors that, they're coming in. And obviously, one of the key things for international investors as well is, transparency, enhanced transparency. And that's what we hear about all the time. If you've got a system that is absolutely clear, what you need to apply to get listed, it's not vague, it's consistent, it's the same as any other jurisdiction, Singapore or London or New York, for example. If you look at the rules, the FSC regulations here, and you look at the rules in the UK, yes, there may be subtle differences because of the jurisdictional differences, but there's nothing in there. We need to give them the comfort that this works. It works in the context. It's a completely different jurisdiction, and this is how we look at it. This is how things work in accordance with the legal framework that the existing legal framework that we have. So I think these are the things that we can bring on board, to assist the international clients that, want to use Mauritius.
Thanks, Malcolm. I think I'll come to my last question for this session today, and that actually needs to go to Guaranco. And we have today in this room right now, people who are here are mostly those who are looking to invest. There are some who are looking to raise funds, but for an institution like Guaranco, we would like to understand from you, what challenges do you face when you assess creditworthiness of projects when providing guarantees? I think I'm asking this question because what could be important here is that investors who are in this room also face challenges. And in a way, we are trying to assess what they can learn from you when they take considered investment decisions.
Yeah, thanks for that. So look, I think Guaranco is obviously a credit guarantee company, And so kind of credit risk and assessing credit risk is what we do. Now, dealing in the kind of in the countries that we deal with, in developing countries and Africa in particular, you know, the challenges are multi-layered and have various, you know, facets to them. And so the underlying kind of theme that we've always believed and kind of in the kind of guiding principle of why we actually involved in the countries that we are is that we believe that the perception of credit risk in a lot of the countries that we are is actually less than actually what it actually is. And so, and yes, we have been able to demonstrate that over, like I said, our 17 years, probably done, you know, over 30 or so transactions on the continent, that the actual experience and the actual kind of risk that investors are exposed to ends up being less than what is perceived. So the idea here is to, like I said, catalyze investors into these countries and particularly into infrastructure, get them comfortable, understanding those risks. I think we believe the best way for us to be able to, for an investor to be able to understand the risk and get comfortable is actually by participating, right? And so obviously our products are meant to, at least in the beginning, allow kind of a way to ease into some of these countries, some of these asset types, and over time, obviously, build kind of a confidence and comfort in investing in these countries. Now, do we have problems? We actually do. This is, these are challenging countries that have unique risks that we have to basically be very, very cognizant of. So what we say is we're not risk averse, we're risk aware. We go in understanding that yes, we have to be very active in how we look at these investments. We spend a lot of time making, right up front, making sure that we understand the risk that we're getting into, find mitigants if possible, and make investments where we believe that we are most needed. And so yes, I think what we can say is we've kind of built a track record here of investing in quite difficult situations. We do transactions that potentially are not, the most the most common transactions. But again, we believe our mandate is to provide impact. And so long as there's an impact story that we can get in, we are able to participate and hopefully kind of hire in the investors that over time will be able to kind of grow with us. But yes, we're very happy. And like I said, for all the kind of stakeholders who are looking to invest in Africa, looking to raise capital, we are very happy to have discussions about how we can collaborate. I am based in Nairobi, and again, we have kind of a presence here, and we are able to at least get over time that we've built kind of ways in which we can actually look at these transactions and make sure that we are we are risk aware as we go into it. But the key is to bring the stakeholders along with us so that we can actually do the needs in Africa are great. This financing gap is daunting. And so we need kind of everybody and all the stakeholders who are interested here to kind of collaborate and kind of let's see how we can be able to kind of solve these problems that exist on the continent and in a way that hopefully makes economic sense to everybody. So that is kind of how I couch it in how we look at credit risk and kind of why we are kind of based actually in terms of getting involved in the areas and the countries that we participate in.
Great. Thanks, Samuel. Thanks very much. I think I have overshot really by almost 15 minutes. So if there is any question from the audience, we'll be happy to take it. In the interest of time, maybe one or two questions.
All right. Please introduce yourself and who you're asking the question to, please.
Hi, my name is Arun Suraj. I'm part of Finesse Group. Question to Mr. Sharma. We spoke a bit about the primary market liquidity and how fiscal policies can help. Beyond that, do you also see exchange rate playing a role in that?
Sorry, beyond that?
Beyond that, do you also see exchange rates also playing a role in improving the liquidity issues?
No, I don't think beyond that there will be challenges, but yes, there are opportunities which exist, and if we are specifically talking about the Mauritius opportunities, there is always a first mover's advantage. There is a opportunity wherein what Malcolm was saying, I totally agree with that. That corporate governance comes when you have the intake and the joint holding of both insiders and outsiders. Outsiders are your investors, insiders are your banks. So when you bring in an outsider into your country to invest the money, you need to have an insider, which is your banks, your central bank, your regulatory bodies, to handhold for a smooth transition. So as smooth the transition is, the success is more. So I don't think that will be a challenge from my perspective.
Any other question?
My name is Bharat Merchant, Danish Green Projects and Financing Advisors, Denmark. My question is that we are talking of a green bond. We have a very strong case for the green bond for Zanzibar government and Tanzanian government. This is for to support the ecotourism, green tourism, even municipal waste to energy. So country, the government will raise the green bond, and for that, my straight question to Guaranco, and not only Guaranco, there is now new co-guarantee partners, 6. So I feel it is only on paper. So when anybody approaches, how fast, how quick, and under MIGA, what is your guideline? The guideline should be clear. Otherwise, I feel it is not improper because you are just talking but not supporting the African countries and not supporting the green bond.
Okay, thanks for that question. Now, we as Guaranco, just in terms of what we've done in the green bond space, we've actually supported a green bond that was issued, the first one in Kenya in 2019. And we continue to support initiatives, especially on the green bond side. So we are actively engaged in looking for ways in which we can support capital markets, and more importantly, we have a sustainable goal also, trying to make sure that we're supporting these projects in the way that that makes it possible. So we are very active in that space, and we are looking for opportunities. Now, when you mention about looking at sovereign issuance, so just to be clear about our mandate before I come to the co-guarantee platform. Guaranco itself is, like I said, our mandate is to catalyze private sector investment into infrastructure. So we don't guarantee sovereign risk, okay? Now, if there's a project that is a private project that is looking for private financing, we are very, very keen to invest in those type of situations. And so maybe that's just a talk about Guaranco. Now, the discussion about the co-guarantee platform, yes, I think there's some work that needs to be done with the other players in the co-guarantee platform. We have AFDB, we have Afreximbank, we have ATI that are all involved. And yes, I think that is actually a way that potentially they can actually support some of these initiatives. And what I'd suggest is, yes, it's we just need to do better in terms of how we can collaborate. But Guaranco specifically, when it comes to actually sovereign issuance, we cannot guarantee it. But again, we are very, very happy to look at any kind of private sector type of project, PPP, even SOEs that are actually managed kind of commercially. We will be very, very willing to kind of step in and support those type of issuances going forward.
A question. Suppose it is a joint venture between government and private. What is the stand of Guaranco?
So is it a PPP?
Yes, it is PPP.
Yeah.
Because you also understand for a private sector, for such large projects, We have to have understanding with the government, and PPP model is supported all over the world, particularly by MIGA also. So your guideline on PPP project.
Yeah, so PPP projects, we have worked on them. So if you have a private player that is obviously partnering with the government, we are very, very happy if that particular entity that is looking for financing comes to look for private capital. We are very willing to support those projects. And yes, if you we can have a discussion particularly about this project if you want, and we can take this discussion obviously after this, and we can share kind of our contacts here. So I'll reach out to you and we can see how we can have a discussion about what we can do on PPPs in Zanzibar particularly.
Thank you, Samuel.
Okay, so thank you very much to each of the panelists for your valuable time. And I think it was a wonderful afternoon, very good insights that we drew. And yes, there is some work for us to do. There is some dimension that we can bring in terms of transparency between the investors and the issuers on our platform as well. So thank you, Mr. Thakur, Mr. Muller, Mr. Sharma, Mr. Bola, and Mr. Chasia for being in today's session.
Can we have a big round of applause to our moderator and our panelists who are here and also who have joined us virtually. Thank you also for the discussion, and thank you for answering the questions from the audience. And now, moving on to the next part, we will request the MD and CEO of Afrinext, Ms. Krishna, to facilitate our panelists today by giving a token of appreciation. And for our panelists who have joined us virtually, we will send our token of appreciation separately. So to start with, Ms. Krishna, please do the honors to remit a token of appreciation to the group managing partner of Appleby, to Mr. Malcolm Moeller, please. Good for, yep. Thanks. Shall we take it? Ms. Krishna, please stay with us. We also would like to remit a token of appreciation to Mr. Sharma, the Managing Director of UCAP Asset Management, Singapore, please. Round of applause, please. Thank you very much. And of course, to Mr. Thakur, who has graced us with his presence and his participation in this panel discussion. Mr. Thakur is the Chief Executive of the Financial Services Commission of Mauritius. Big round of applause, please. Thank you very much. Can we also ask the four of you to come forward for just a quick... Thank you very much for your time. Yeah, they will be in the background also. So we can probably request people who are with us virtually to have a smile. Thank you very much. Thank you very much. Another round of applause, please. Thank you. Distinguished guests, ladies and gentlemen, we have now come to the end of this session. And of course, we appreciate the contribution of our panelists and the moderator for their contribution. On behalf of Afrinext Stock Exchange, we thank all of you for your presence and participation today. Should you have any queries, you can always visit our website. We wish you all a wonderful rest of the afternoon, and we now invite everyone to join us for a high tea. Thank you very much.